Good evening, dear colleagues. As always, Sunday, as always, Dan Strelkov and the Forex Times Project. Dear colleagues, Community Forex Times. These are forecasts based on data from the Chicago Mercantile Exchange, forecasts based on Ralph Elliott's wave theory and trading signals in quotes recommendations. Come to the Community Forex Times. I'm looking forward to seeing everyone. And today, as always, let's consider the probable movement of trading instruments for the upcoming trading week. There will be euro, pound, and gold. I took euro and pound because in most cases, the correlation between these trading instruments is positive. But today we will consider an interesting case. So let's go. Euro against the US dollar. Let's remember that globally for this trading instrument A, and specifically we have a certain three-wave movement where the triangle is in the middle. You know, dear colleagues, that the triangle is the penultimate wave. Therefore, this movement for us is corrective in the form of a zigzag and then develops into a probable triangle in corrective wave B, a triangle ABC, probably even more in the wave. So we remembered this structure for the weekly time frame. It is very likely. And now let's go down to a lower time frame and see what we should do for the upcoming trading week. On the upcoming trading week, you see that I have already depicted the probable diagonal. This one is the final one. Why? Let's figure it out with you most likely here. And at the end, we have with you a final diagonal triangle. What should we do for the upcoming trading week regarding the euro is more difficult than for the pound and gold, for the simple reason that we need to see the formation of an impulse movement in any case, after which a correction, and we already make a decision to enter the market for a purchase or from the 50 range on the Fibonacci grid, or with pending orders above the base of the correction wave, or slightly above the base of the correction wave, wave A, or slightly above the base of the correction wave, wave C. I'm so carefully talking about the euro for the simple reason that we will return to it not once, but specifically for this simple reason that according to the Commission's futures, we are observing a decrease in buyers by 31%. This indicates that at the moment, the probability of a corrective decline is even more significant than the rise. Plus, we are observing below the current price put option contracts, net put option contracts totaling 100 and 194 million, and something suggests that the price may easily decrease to them. But why are we opening the pound now? And let's figure it out with you. The situation with the pound is much more interesting, and the pound is currently much more attractive than the euro. Let's figure it out now. The first thing to note is the wave structure of this trading instrument, or again, dear colleagues, we have an expanding diagonal triangle, 1, 2, 3, 4, 5 in the corrective wave, and the formation of a triangle. A triangle is the penultimate wave, therefore, wave B is not yet fully completed, and after C, D, and E, we have a downward breakout. And dear colleagues, we clearly see a hint from professionals at the Chicago Mercantile Exchange, namely an accumulation of option contracts totaling over $500 million at the level of 125. Therefore, regarding the pound, if someone's hands are itching a lot, you can sell, and already at the level of 125, you can consider entering the market for buying. For those whose hands are not itching, it is not worth selling at the moment. It is worth waiting for a corrective decline in wave C. And when the price reaches the level of 125, we will make a decision to enter the market for buying. I understand, dear colleagues, that you may say, then maybe this is not the initial diagonal, but an expanding one. Yes, in fact, there may be a diagonal triangle here too. However, I like it less than the expanding initial diagonal, but this is also possible here. Wave 1, wave 2, wave 3, a triangle in wave 4, and a breakout in wave C to the level of 125, and we make a decision to enter the market for buying. Actually, dear colleagues, this triangle, whether it is a classic diagonal triangle, doesn't spoil the picture for us. Plus, please pay attention to the probable decline to the level of 122.5. Furthermore, the fact that buyers have decreased by 42% indicates that professionals still believe that a decline in the trading instrument is likely. And now let's turn to gold. Gold is updating its maximum value, but overall, this doesn't affect the picture. Probably we are seeing the formation of the final diagonal triangle with waves 1, 2, 3, 4, 5. And dear colleagues, I repeat once again, why is wave 3 here and not here? Because here we have formed a triangle. And if we assume that wave 3 is here, then wave 4 should be here. Therefore, the triangle is working downwards, 1, 2, 3. But where is wave 3? It's simply not there. Therefore, the triangle worked upwards, 1, 2, 3. And we see a zigzag. So wave 3 is in its place. And we expect a corrective decline to wave 4 according to the rules, which should engulf the maximum of wave 1, which is the level 2080. So you understand that the corrective decline will be quite deep. And now on a younger time frame, we see a high probability of forming a triangle. Here the formation of a triangle is ascending, and we have formation A, B, C, D, E, and a breakout from wave E upwards. What will we do next week? There is a great resistance level, not just a level, but a range. And please pay attention, we have an increase in buyers by 3%, indicating that the probability of the trading instrument's continuation of growth is higher than its decline. Therefore, on Monday, Tuesday, the first half of Wednesday, the price rises to the strongest resistance range, which is 2250 to 2254. We set a stop loss at this level. Market makers hedge options with their premiums, and there are net option contracts totaling almost $500 million. When the price reaches the range of 2250 to 2254, we decide to enter the market for selling. We enter the market for selling either based on patterns, I really like the pin bar with divergence, or, dear colleagues, we wait for an impulse movement, correction. And after the formation of the correction, we enter the market, either from the 50% or 61.8% Fibonacci level, or with pending sell stop orders. This way, we can work with gold. Therefore, gold is quite a promising trading instrument for the upcoming week. And not only gold, but also the pound is again a promising trading instrument. But as for the euro, I would still take a closer look, for the simple reason that, yes, we have a beautiful target level, one beautiful target level at the top, but still these 100 million and 194 million are bothering me. Thank you very much, dear colleagues. I invite everyone to the Community Forex Times. I would like to remind you once again that this is forecast based on data from the Chicago Mercantile Exchange, based on Elliott waves, as well as trading signals in brackets recommendations. And of course, I'm always available for consultations. Thank you all. Have a good evening and goodbye.